Hello and welcome to the Smart Money Dominee Show, and I am your host, as usual, Keith Richards. I am President and Chief Portfolio Manager at Value Trend Wealth Management. I'm also a technical analyst. And today's a really quick video, but it's a good one because I'm going to talk about one stock, one trading idea that I think has got short-term opportunity. I don't usually do this, but I thought it'd be a nice change. I'm going to talk about Tesla, as the title of this video suggests. And I'm not a long-term fan on the trend, as you'll see in a moment, but I do think there's an opportunity. So without further ado, I'm going to bring you right to the chart and it's a one chart show today. That's all we're going to talk about is one chart, and I'm going to bring you down. So here, this is a roughly 2 years chart. It's started roughly the end of 2021 is the left-hand side, and current pricing is on the right-hand side. You can see it's been in a downtrend with lots of volatility, near-term downtrend with a little bit less volatility. But what I want to point out here is stocks, even when they're in a downtrend, they're making lower highs and lower lows. And when they do that, that means that they are making occasional highs. So what I'm seeing here on Tesla, just from a pure price formation look, is a consolidation and a small breakout. I think there's a good chance of it going back up to that trend line. Now the trend line's ever descending, so keep that in mind. If it angles like this to get back, it might only arrive at 220 to 230, but I'm suggesting maybe if it moved quickly a $240 target. Either way, you'd have to watch the trend line and the angle of ascent. But you see the gaps must be filled. Some of you know that. That's because a gap represents either irrational excitement or, in this case, irrational pessimism. And usually the market's wrong when it gets that quick in its moves. So let's take a look at why I like the potential for us seeing that trend line, not just from a general pattern perspective, but from a momentum and force index perspective. Now, many of you know that I like the money flow index. It's actually just a oscillator, a momentum oscillator, in fact, of money flow, like how much money is moving into or out of a stock, and it measures the momentum of that. You can see that in the past, like when the MFI goes through its overbought line, it's quite accurate. You can see green level here, green level there, and that was signaling two major overbought levels. Even on the more minor signals, it definitely signaled overbought levels here and here. There's another green one. That was a pretty good signal. And same with the lower signals. You can see, a couple of minor ones there definitely resulted in short-term rallies, and a pretty good green signal there where it went over the line for oversold, and we got a substantial rally. This one was pretty good right here at the bottom, and we're seeing a rally there. So this is what we're seeing right now, is we're seeing one of these very strong oversold signals from money flow, and you can see it's picking up, it's hooking up, and that's what we look for. So in fact, you could argue that it's probably picked up more than the stock has picked up, so there might be room for that to go. But we don't want to just look at money flow. We want to look at money flow and price momentum together, and that's what the force index does. And again, when you see a hook up from a very oversold position, that can be very positive. You'll see that across the chart every time this has happened. You can see this one was a really good one, early 23. Okay, last but not least is RSI, classic price momentum. So we're no longer even including money flow in our formula. Price momentum, when it gets very oversold on the RSI level, you usually get a nice hookup. The big one, early 23, strong oversold signal on RSI, strong movement on the price. So that's what we're getting right now, a very, very similar signal. So all three of these indicators, plus the fact that the formation is kind of a basing formation on the daily chart, probably fill the gap, probably even go a little bit higher based on these momentum indicators. I think Tesla is not a good buy and hold stock. It's definitely trending down, but I do think it's worth considering for short-term traders. And I think there's opportunity for those willing to take a risk within a declining trend stock. This is not your grandmother's stock, you could say, but I think there's opportunity for traders who want to see if they can squeeze a little bit out of this stock before it hits that trend line and falls. Thanks for watching. We'll see you next week.